Russia invades the Ukraine, sending financial markets into a tailspin. Qantas reports another big loss, but is hopeful that things will get back to normal this year, and how planes may soon be powered by hydrogen. It's Friday, the 25th of February, 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. It's a very sad morning with what's going on the Russian-Ukrainian border and beyond, really, as far as Kiev at the moment. It's, as you mentioned in the opening, they invaded yesterday. It's changing hour by hour, but we all just hope that things settle down.
Yeah, and sadly, it's something that you could see was coming. Everyone knew we were going to end up at this point, and it's just been an absolute disaster watching it all unfold, and we'll discuss that more in a moment as well. Stick around later. Sean's chat to Kath Whitaker is a good one. CEO of Self Wealth, one of the longest running discount share trading platforms. Just a really interesting chat about how that business has managed to set itself apart from really what has become quite a crowded marketplace. But first, Sean, back to the Ukraine situation, and Russian President Vladimir Putin has ordered really a full-scale military invasion of the country, triggering what could be the largest conflict in Europe since World War II.
Yes, Michael. Overnight, Russia launched an airborne assault on some of Ukraine's major cities. After air and missile attacks, Russian troops attacked from Ukraine's northern border with Belarus, across its eastern frontier with Russia, and in the south from the Crimea. Tanks and armoured vehicles later rolled into the country from all three fronts. The Ukrainian President Volodymyr Zelensky said fighter jets and dozens of helicopters had attacked a key airport outside Kyiv, and Russian forces were attempting to seize the disused Chernobyl power plant north of the capital. Mr. Zelensky said it was a war against all of Europe. According to the Financial Times, roads out of Kyiv were gridlocked with citizens fleeing the capital, while city authorities ordered residents to seek refuge in basements and bomb shelters. Global condemnation of the attacks has been swift, and several countries, including the United Kingdom, have imposed further sanctions. US President Joe Biden said the prayers of the entire world were with the Ukrainian people, and said Russia alone is responsible for the death and destruction the attack will bring. United Nations Chief Antonio Guterres pleaded with Russia to end its aggression.
Now, Sean, you mentioned some of the responses from world leaders. What did Prime Minister Scott Morrison have to say?
Well, the Prime Minister condemned the action immediately and said there really was no role for Russia in Ukraine. Opposition leader Anthony Albanese agreed with him. He said that it marked a grave moment for humanity, and all Australians are united in condemning Russia's shameful act of aggression. Business leaders also expressed fears. Commonwealth Bank boss Matt Comyn said financial market investors had to expect volatility now. He said funding markets, currency markets and oil would be particularly hard hit.
Yeah, on that, how did financial markets respond?
Very quickly, really. Brent crude oil prices surged above $100 a barrel for the first time in more than 7 years. It's at the petrol bowser where most Australians will feel the immediate impact of the conflict. Gold prices surged to a 13-month high of $1,921 an ounce. The US dollar and Japanese yen both appreciated against other currencies. They're considered safe haven currencies. As a result, the Aussie dollar fell back below 72 US cents.
Yeah, and the local equity market?
Well, the banks tumbled, the miners tumbled. BHP was actually down nearly 7% because it went ex-dividend. The technology and healthcare stocks fell, as did many cyclical stocks. Even the oil and gas stocks fell, notwithstanding the jump in Brent crude prices. Only the gold stocks soared, with market leader Newcrest up more than 4%, while Perseus Mining was the best, up nearly 13%. It really was a bloodbath yesterday, with 90% of stocks falling. By the end of the day, the S&P ASX 200 was down 3% to be back below 7,000 points, erasing all those steady gains of the past 3 weeks.
All right, what about international markets?
Wall Street slumped in early trading, with the Dow Jones Industrial Average, which measures the 30 leading companies in the US, back to levels of last March. But in early afternoon trading, markets had rebounded somewhat. They were still significantly lower. At one point overnight, all the major indices were down more than 10% from their most recent highs, meaning all had fallen into correction territory. European markets sold off heavily, with the Stoxx Europe 600 down more than 3% and London's FTSE off nearly 4%.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, a lot of the focus has been on Ukraine, but there's a lot of other business stories around as well. Qantas reported its fourth half-year loss in a row yesterday, and boss Alan Joyce sounded a little bit frustrated.
Yes, it was a half year that began with the end of lockdowns, but finished with more restrictions being imposed, and that's why he was so frustrated. It certainly didn't help the national carrier. Mr. Joyce said the lockdowns at the end of last year were the most difficult so far. That's a comment we've heard quite a few times during this reporting season from different CEOs. Qantas has now lost more than $6 billion since the start of the pandemic and $22 billion in revenue. The Omicron variant is expected to cost the airline $650 million, but Mr. Joyce said bookings were picking up again, particularly in international ticket sales, and surveys show that the intent to fly is high. Business travellers haven't returned yet, but Mr. Joyce is hoping the dropping of mask requirements in eastern states will kickstart more corporate travel.
The thing about Alan Joyce is he might get a bit frustrated, but he's always pretty optimistic. Was that the case yesterday?
Of course it was, Michael. He can't help himself, really. Mr. Joyce welcomed the state premier's decision to reopen borders and move away from a zero-tolerance policy. Clearly, that was a nod to Western Australia's Mark McGowan, who's finally made that decision. He said Australia's population was highly vaccinated and the future looked brighter with international borders finally reopening. Qantas expects domestic capacity to be about two-thirds pre-pandemic levels by the end of next month, though international capacity is still around that 20% level. Now, its share price fell nearly 5% yesterday, though that was as much to do with the Ukrainian crisis as it was with the earnings announcement.
Another in the same industry to report yesterday, Sean, was Flight Centre, and now its boss, Graham Turner, was upbeat, but of course pretty worried about what's happening in Ukraine.
Yes. For the past couple of years, there's always been a challenge on the horizon for the travel and tourism sector. And as economies emerge from COVID, it seems now that the challenge is the Ukrainian conflict. And of course, that could cull travel and tourism's recovery. Having said that, Flight Centre is having its best month since the COVID-19 pandemic began, Mr. Turner said. Things are heading back to normal, helped by some governments, particularly those in Europe, starting to treat the virus as endemic. But the upbeat commentary couldn't prevent a sell-off in Flight Centre, with its share price tumbling 8% yesterday after it announced a half-year loss of $194 million. That actually was better than a year earlier. The group, though, is going through $40 million in cash a month. That's much more than it was previously.
And Sean, it's good to have another big deal to talk about. Spanish construction group, the ACS Group, has launched a $1.5 billion hostile takeover bid for the remaining stake in engineering company CIMIC that it doesn't already own.
Yes, this is the old Leighton's business. Most people would know it by that. Mm-hmm. And ACS, via its German subsidiary Hochtief, wants the 21.4% of the company it doesn't own. If successful, then CIMIC will join Sydney Airport and Afterpay, leaving the ASX this year. Now, Hochtief owns 78.6% of shares already. If it gets to 90%, then it can compulsorily acquire the rest. So it's a pretty good bet it will get there. CIMIC's share price jumped 33% yesterday after the announcement to $22, which is exactly what Hochtief is offering.
Now, Sean, you mentioned before some of the market movement yesterday because of the Ukraine crisis, but there were actually some pretty crazy share price moves yesterday on the back of earnings as well.
Yes, none more so than Life360, the US-based location services company listed on the ASX. Now, its share price tumbled 29% after it said losses had widened as it spent more on expansion, notwithstanding subscriber and revenue growth. What's interesting here, though, is it warned that its recently acquired tile business, which allows tags to be put on car keys and small items, including pets, in fact, might be hindered by the experience of AirTag, which is owned by Apple. Apple faces stalking allegations after the AirTag was slipped into pockets or bags without people knowing. That's really weighing now on Life360's share price because that's where its growth was hopefully coming from. Now, another company that was dumped yesterday was Appen. It was down 28%. The artificial intelligence data services company said changes to Apple's iOS privacy rules have affected some of Appen's biggest customers and the services it provides. As a result, earnings came in below already low expectations. This is a company whose share price has already halved in the past year. Then it went down another 28% yesterday. Finally, you can add to the list vitamins group Blackmores. That slumped 10% yesterday after announcing a slightly higher net profit, but it warned of increased raw material costs.
Sean, you talked yesterday about reporting season and about the fact that there's so many companies all reporting and so many good stories that there really isn't time to tell them all. Were there any other highlights out of yesterday?
Look, there are a couple, maybe three, that we might go into. Eagers Automotive, I like this company. It's the country's largest car dealership group. It said it had signed a 5-year deal to be the exclusive retailer in Australia for the fast-growing Chinese electric vehicle maker BYD. Now, BYD is considered a future competitor to Tesla. Eagers announced a 63% jump in underlying profit. Now, Nine Entertainment was one of the few companies in the top 200, away from the gold diggers at least, to have a share price rise. Its share price jumped more than 3% after it announced a 30% jump in profit and a higher dividend. And another in that category was Pepper Money, which announced a 31% rise in full-year profit and increased its dividend. It managed to maintain better than expected profit margins. Its share price rose more than 2%.
And just quickly, Sean, what's the latest COVID news?
Well, the West Australian government has unveiled a $67 million support package for businesses in the state, including a relief for commercial tenants. The state recorded more than 600 cases yesterday, but Premier Mark McGowan warned it was heading towards 1,000 cases a day and the road ahead would be bumpy. Queensland recorded 6,100 COVID-19 cases and 8 more deaths. In Victoria, the numbers were 6,700 cases and 16 deaths. New South Wales recorded 8,300 cases and 12 deaths. And finally, the ACT recorded 661 new cases.
Okay, Sean, what's making headlines in today's news media?
Well, Michael, the Financial Review is reporting that Australia is heading for a housing supply crunch despite the population taking a major dent due to the COVID crisis, with demand set to outpace supply within a few years. That's according to the latest State of the Nation report from the government's expert housing advisors. And the Fin's also reporting that the national gender pay gap narrowed by $6 a week compared to 6 months ago, but men still earn $255 a week more than women. Women working full-time earned on average $1,591 a week, while male full-time workers were paid $1,846 a week, according to the federal government's Workplace Gender Equality Agency.
All right, running through some of the other stories around today, billionaire politician Clive Palmer has been taken to hospital in Queensland with signs of illness to be tested for COVID-19. Mr. Palmer and his wife were transported by ambulance. Now, he is a vocal opponent of vaccine mandates and has not been vaccinated himself.
Let's hope he and his wife are okay. Average weekly ordinary time earnings for full-time adults rose 2.1% last year, according to the Bureau of Statistics. That's about in line with Wednesday's wage price index, which rose 2.3%, and pretty much supports the Reserve Bank's argument that it can be patient about interest rates. Meanwhile, total capital expenditure advanced 1.1% in the December quarter. That was actually a bit below economists' forecasts.
I love how you get the economics stories and the statistics, and I get to talk about submarines. This is pretty good. Unions, Sean, are calling for up to 6 conventionally powered submarines to be made in Adelaide as a stopgap measure to create more than 2,000 shipbuilding jobs. This is while the Navy waits decades for the delivery of its nuclear-propelled fleet. According to the Financial Review, a report from the Australian Federation of Shipbuilding Unions warns that the cancellation of the $90 billion French-designed submarine project has cast a cloud over thousands of jobs in the local industry.
And along the same lines, the collapse of construction group ProBuild has left 750 employees and many tradies and contractors facing an uncertain future after several businesses connected with the construction firm fell into voluntary administration. Administrator Deloitte confirmed it had taken control of 18 companies linked to ProBuild. Melbourne-based ProBuild has at least 18 projects under construction at the moment. That's across the country, including about $5 billion worth in Victoria, where the job losses will be felt keenest.
Now, Sean, international news is obviously full of stories today about the Russia-Ukraine situation. Is there anything else going on that we should know about?
Oh, look, there's just a couple of interesting pieces. Obviously, Russia-Ukraine is dominating the news agenda. One of them is about Airbus planning to use a super jumbo A380 to test hydrogen-powered jet engines as the European group prepares to bring a zero-emissions aircraft into service by 2035. Remember, one of the big emitters around the world are aircraft. Airbus will work with CFM International, which is a joint venture between a French company called Safran and General Electric in the US, to develop an engine that can run on hydrogen. That is the holy grail for aircraft. The test aircraft should be flying by the end of 2026. And finally, there's an interesting story in the Wall Street Journal. US life insurers, as expected, made a large number of COVID-19 death benefit payouts last year. What's surprising is that many saw a jump in other death claims too. Now, industry executives and actuaries believe many of these other fatalities are tied to delays in medical care as a result of lockdowns in 2020, and then later people's fears of seeking out treatment and trouble lining up appointments. Some insurers see continued high levels of these deaths for some time, even if COVID-19 deaths decline this year. An unintended consequences and a very sad one.
Sean, this is the third death-related story you have brought up in 2 days now. It's starting to get a little bit morbid.
I'll work harder then, Michael, to stay away from that.
One of those things as you get older, you just start to see death everywhere, really, isn't it?
Oh, please.
Sorry. All right, up next is the Fear and Greed Daily Interview. And Sean, today you're speaking with Kath Whitaker, CEO of Self-Wealth.
Yes, Kath is a very experienced person in that discount brokerage space, and Self-Wealth is one of the oldest companies, and it's lasted the test of time. She talks about how you can actually run a business and charge such low rates for brokerage and continue to operate, and also what it means when people aren't charging for brokerage and whether they're worth putting your money with. It's just, if you invest and particularly if you trade, this is an interview you should be listening to.
Yeah, absolutely. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 25th of February, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.